Hey, good morning, Bruce. Yeah, you got it. Chris, yeah, I'm not sure what's going on there. Good morning, Delph. Manny. Let me try going back for a second. Chart's good. TC. Chris, I'm not sure. Maybe try a refresh. Let me know. Oh, now you can see. Okay, perfect. All right, guys, welcome. Good morning. What's it going to be today, right? Today it's going to be a good day. We're going to look at some different ideas. I kind of wanted to start out, well, welcome to the pit, where we're trying to be here helping and educating and mentoring and doing what we can to see if we can help whoever is listening and is interested in trading and trying to, whether working your own account or working the prop firm accounts. We've got some really cool rules in the Pitbull prop current firm accounts that are different, a little different than the others. And it's going to be good to see Manny's presentation there. So I would suggest that. I kind of go back and forth, from trading my personal account to my prop to a prop account. Usually I just trade a prop account or one or two at a time. Partly I think it's sort of helpful if you're a little bit out of the flow, then sometimes you can, maybe just grab an eval, even if it's a cheap one that's 25K account or whatever. Sometimes it can kind of help you get back into the flow of things a little bit there. So I definitely recommend it. And I think you just have to really be aware of what the rule set is so that you're trading accordingly with your risk management and so on. And I just wanted to start out quickly with my level sheets here. I've been doing these for years and years and years, and it's just basically at the end of every day, I have this massive spreadsheet that's sort of my journaling sheet. It's my levels sheets, but what I do is I plug in the open, high, low, and close and volume. And then I kind of adjust and look at some of these levels. And what I wanted to point out is on the crude chart, on the crude level sheet, yesterday, for today's trading, I finally got back to a short only filter again, and that's based on both 5-day and the 13-day moving average turning and sloping to the downside. You can see also the 50 and 100-day are also sloping to the downside. The other curious part about crude oil is we've had several days in a row, of course, with like $5 or $6 movements to match, and what has lifted this 5-day ATR up to these elevated levels. But then yesterday we had an NR 7-day, which is the narrowest range day in the last 7. So we only traded $2.50 yesterday. It's sort of printed a big doji candle here. What that means, we'll have to wait and see, if anything. We've got our big jobs report tomorrow, so the market could very well continue to be sideways today and kind of chop around a little as it digests earnings and this last huge monster move, and the war and all the stuff. But also we could still have another very volatile day where you have a lot of position squaring ahead of the jobs report tomorrow. So it's impossible to know, right? For me, one of the biggest tricks in trading is identifying if we're in a trending day or a range bound kind of day. I mean, the fortunate thing in today's action is that even range bound days can yield us what, 40, 50 points of range in the ES, right? If not more, but so in a similar way here, the ES flipped to, for me, a long only filter 2 days ago. And again, that's because the 5-day and 13-day, which had kind of rolled over, then obviously with this big up move, I talk about it with my shorter term moving averages as well, is that when you have the big up move like this, it pulls those moving averages up to an upsloping condition because they're lagging indicators, right? So something to beware of there. And similarly in the NQ on my sheet today, we have our first long only day in terms of my filter and how I've got that filter set up. Again, yesterday was an NR7 day for the NQ, still gave us 543 points. Yes, was not an NR7 day. So anyway, those are some quick things to look at on my sheets. You can ask questions on that stuff if you have any questions there, and otherwise we'll get started here, get ready for the open. I've got all my my charts up here on my main screen. Most of you have heard before, but what I do is with these yellow boxes, I use these yellow boxes here to represent 5-day ATR range, and I center it on the Globex session close, and then I just use them throughout the day to sort of guess on if the low of the day is in, how far will crude go, or if the high of the day is in, how far could it go the other way. So you can take these boxes and move them around. Like for instance, crude is now on a short only filter for me. So if I'm going to assume that crude just tested this range, the high of yesterday's sort of range, and has already put in a high for the day, then I can just drag my box down like this to match that high of the day. And my theory would then be that if crude can fulfill its 5-day ATR of $5.37, then the theory would be that today we could see it print back down to 71.5 or so. Okay, so that's how I use the boxes. It's hard for me to believe that that's something that's going to happen in crude. I really think we're going to be going higher again, even if the war ends. But maybe not. And I like to respect my filters, because oftentimes when you get into a scenario that is an extended trending condition, those filters just help you trade with the wind at your back, and they help you, help me really since they're my sheets, right? They help me sort of stay aligned properly. Talk about, hear David talk about the structure and staying aligned, right? So I also use this orange line to update the regular trading hours opening price. So I've done that already with crude at 76.22, and we'll go ahead and adjust those for ES, NQ, YM, and RTY at the open. But a correct observation and consideration there from J Morak, Jonathan, right? NQ's been weaker in the overnight, and it certainly didn't sell off hard, but it's just kind of been a steady drip. And it did actually reject the 50-day moving average again, which comes in today at 29,516. So it was an awesome rally a couple days ago, and it really started to accelerate harder when NQ reclaimed that 50-day back on Tuesday. That 50-day came in around 482 or so. So it's not necessarily rejecting it hard yet, but we do have all these kind of difficult mixed signals going on with, some of the earnings reports and SpaceX and so on and so forth. So, the thought is you certainly could have a little more selling today, a little more back and filling. But then the question is the market going to resume its monster uptrend? And let me share this drawing I posted last night on Twitter, because I just thought this was such a really neat, let's see. I thought this was just such a really neat and obvious symmetry, and you see these kinds of symmetries all the time in the markets. And so I think it's worth paying attention to them, because it's sort of, the charts are reflecting the market behaviors of the market participants. Okay, and so that's partly why you see measured moves. It's partly why you see, you want to use those representations to help you understand, hey, how deep was the pullback this time around, and then where did it rally to, and so on and so forth. So, and yeah, here's my Twitter. I don't really post on Twitter a whole lot. I just try to kind of promote Pitbull every once in a while, and Trader, the Trader platform, Niels's platform, which is an awesome platform if you haven't used it yet. It's built on top of Rhythmic, so I use Rhythmic sometimes. I use Trader as much as I can, really, but so ding, 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 here we go. Let's update our opening prints. We've got in the ES 77.52. So I just drag that orange line down. In NQ, 29,335. I was asking Chris and some others in the room yesterday, what's more important, like SpaceX being down yesterday 13.5%, or NVIDIA being up yesterday, whatever it ended up, 4% or 3.5%. So it was an interesting sort of choppy push and pull there, I think. And the rotations, of course, have always been, something we've talked a lot about over these past couple years. It just seems like there's always the money always wants to go somewhere. And so it's interesting, like even on Tuesday when we had that big rally, it was like there were still some rotational things that were happening that didn't, I was surprised there wasn't actually more green. I know we had a monster rally, but I was surprised that the board wasn't still just, the big board wasn't still just completely green. Um, and that's, partly because you get the energies that are typically right now because of the war are going counter to, oil goes down, so then the energies and all that stuff get affected as well. And then, these big moves in the dollar and the bond markets. I mean, there's just so much going on. To me, it's just absolutely fascinating time to be a trader. And, um, of course, the moves are spectacular as well compared to what they used to be. So there's just so much opportunity, but it also comes with a lot of risk, right? So um, let's see sort of how deep we can go on this pullback here. And there could be there were a lot of late buyers yesterday that ended up getting, turned around on that stuff. I mean, it's sort of a typical scenario, right? Because nobody expects that kind of monster rally. So then you have a lot of people shorting into it, and then you know, they finally cover, and then they think, now I'm going long, and then it reverses right at, it's exactly how capitulation kind of stuff works. Um, is that you always tend to sort of do the wrong thing right at the wrong time. um, and so one of the things with trading is, trying to just keep a cool head and keep your emotions. It's really, really hard to do sometimes, but it's absolutely critical. And I'm as guilty as anyone else. Was telling the guys yesterday, still fighting my demons. I have these good days, and then I can have good weeks and good months, and then you know that lurking demon pops out of nowhere and causes me to do some stupid stuff. And I have a bad day, and it costs a lot of hard work. It's like, why give up so much hard work in one day, right? Just follow your risk management, take your loss, and don't worry about it. It's not a big deal to take a loss. That's part of trading, right? Um, so anyway, here we are. We've kind of recaptured our open here in the NQ. We tested 240. I'm going to look at my sheets here for levels. So that was not quite down to S2, which, again, that's a pretty awesome pullback for the kind of buying that we had off the low. So it kind of goes in my theory, it kind of goes towards this continuation of trend theory. And what I'm looking for, especially, is if anybody recaptures that 50-day and then kind of makes a beeline towards the all-time highs, as illustrated in my chart there. um, if these markets are going to behave exactly the same because they have the same participants, you know, I mean, I'm not always so bullish, right? I mean, I'm really not that bullish right now, even, but they could just put in a measured move here in this stuff. And I think Rich and some of the other bulls out there, yeah, they've been spot on saying, well, we're going to go to 8,000, right? And so when you start looking at like the ES levels, I still have on here the up move from the Terra Tantrum low to the previous all-time high at 70.43, and look at the 382 extension and where it comes in at 78.70. Okay, and so with the NQ actually extended when it made its high almost to 31,000. It got almost to the 50% extension, which was a little bit, it might have been a little over 31 or, somewhere in there. But so, yeah, I mean, this thing could be there could be way too many people still hedged and positioned short and fighting this thing when, we could be just in this super boom cycle like a lot of the AI bulls and everybody, really talks about. So, and, obviously the volatility has been extreme, but this is really important to try to just align yourself with the overall direction. And like for me, being bullish is I have to sometimes force myself, right? Because I'm kind of like I have this sort of I guess naturally instinctive short side trade parameter, or sort of not a bias per se, but just since I learned how to trade in 2008, it's like a certain amount of pessimism, right? Things can get out of hand to the upside, and then once all the shorts have covered, that's when you can kind of get those downdraft days like we had yesterday, because it's just a matter of, okay, everyone's too long or the shorts have all covered, and so now there's nobody left to support the market. I'm gonna flip over here to Niels's trader platform. Let me make sure I'm in the right account. I can't remember what account I'm in here. Can't even read the numbers. Getting too old. Oh, it's right there on the top. Okay. So we came up and tested this downsloping moving average perfectly and rejected it so far. And sometimes when that happens, it can be a hard rejection point, but look at how the NQ is now holding up here above this level. And we'll see if NQ starts really ripping again, and we might get a really nice powerful move here to the upside. So I'm gonna try above the open 52.25. Oh shoot, I had my stop. Ugh. What did I want my stop? Like 5 points or something. I'll just do a 4-point stop here. All right, 52 and a quarter. I just added one on accident, but that's okay. See if I can get one off at 60 and a quarter. Well, maybe I'll try one there, 55 and a quarter. And then this one, yeah, maybe we'll rip right through these. So I don't know. I'd like to add to it, but it's sort of choppy so far, right? They're kind of typical when you're trying to trade early like this. I have a hard time doing it. We do have a wholesale inventories number coming out. We have a couple bill auctions, some mortgage rates. So ultimately, what I want to see is price hold above the open with a bias that we're going to put in another green candle today. I want these moving averages to start sloping back to the upside, which means you need that buying thrust to continue in order for those moving averages and indicators to start sloping back to the upside. Yeah, this is a nice, if this bar can close green like this on the NQ and ES, you know, that's a nice rejection off of a fake, you know, breakdown, false breakdown. Quick glance across the board. We opened, it looks like around 270 or so on the advanced declines, traded up to 370. We're now trading 95 or so. You've got some buying going on here in Apple, Meta, Microsoft, Nvidia, Amazon, Google, Tesla, a little bit weak. SpaceX up 1%, trading 109 and a quarter. Let's see where SanDisk is. Dell down 6%, SanDisk down 8%, Intel down 2.5%, MU down 3 3/4. WDC, Western Digital down 15.25%. Wow. Okay, so was that earnings yesterday? I don't know. But these things are hard to trade when when there's a lot of different mixed signals going on like that. But it's sort of, you know, one of the reasons I always liked trading the index instead of trading stock specific kind of stuff, because I had my moments of trading stocks for a while, like 5-6 years, and I've never been really that focused or good at fundamentals. And so then when earnings and stuff comes out, if I tried to trade that stuff, usually it would cost me money, because, you know, I get too opinionated about something, and I didn't understand how big those moves could get. And when they're just getting out of a position one way or another, and it's really it's a really one-sided kind of trade. If you get in front of that stuff, you just get run over. So you got to be light on your feet and willing to accept the fact that even if you think something is bullish or whatever, the market may not react that way, and it can just be positioning. Where's the positioning, and how is that going to play out for whoever needs to rebalance their positioning in a meaningful way? Like, it doesn't matter to us as small time traders, right? It's just, I'm talking about big institutional order flow, and that's why trading's always an unknown, because at any moment someone can come in, someone can exit, and if they're using a market order and they just need to buy 10,000 contracts or something like that, boom, there goes your stop, or you get filled on a nice profitable tick mark. Like, why didn't I hold that trade a little longer? Well, because I'm not great about trading early. I I tend to just do a lot better if I kind of wait. But now we have a nice, long bias confirmation here where we made the low. We have all this overnight chop that we can get through, that anyone that was short has their buy stops up above here. So any of the shorts that got reestablished yesterday, if it doesn't follow through, they're going to be covering, right? So we moved up through the open. We have this 1 minute moving average that turned nicely to the upside. We have a down sloping 15-minute moving average from yesterday's selling that now is sort of trying to reverse and confirm back to the upside trade. So, if you were short down in here now, you're really waiting to see. You're hoping probably that price comes back into this level so that you can cover, because if you can't cover it down in here, you're going to be covering up above the 75s. And so that's sometimes the price action that precludes the move upwards, is that there's someone that's reading the chart that way, that decides, I'm not willing to take my stop at the 75. So even though I'm taking a loss, if I'm short, I'd rather take it right here, because this could, in another minute, it could be through the 75s, through the 85s, whatever. I don't know, but you're seeing some selling in the YM. That's interesting, right? YM rejected the other way. It was very strong in terms of relative strength yesterday. We really didn't get much of a pullback from it. Yeah, this is, I think, in here somewhere, could be pretty good support. I mean, if we get a real test back to that 58 level, that could be good, but the breakout point here was 59, so maybe try them at 59. Let's see what happens if I stick a bid in here. advanced declines are breaking a little lower. They're still about even on the day, but they might be about to go negative here. Nvidia trading 223, right? So I was asking that question yesterday, what's more important? And I don't know that it's hard to ignore strength in Nvidia. So it looks like I just missed that. They traded it down to 60 and a quarter. So I was being a little too precise on that. Story of my life sometimes, but what you have to be careful of is if you miss one and then you chase it up there and then they come back and give you another chance, then you're like caught in this no man's land of, are they going to reject this and do like an expanding range, sweep all the stops now to the downside, or are they going to follow through? And it's like, if you've missed your entry the first time, oftentimes they do give you a second chance. Because again, if someone was shorting it there and they thought that it was going to sweep to the downside, and then it held that level perfectly and went right back up towards these highs, well, those short traders are anxious right now, right? Because they're worried if this thing breaks on through. So sometimes you get that retest, which gives you a really nice spot to just basically say, look, I don't want that low to be violated, but if it retests it, what I want to see is just a perfect, retest, maybe like a little bit of a stop run, like if they trap people for 1 or 2 ticks and then take it higher. So I'm going to flip back over here to this other chart for a second, because advanced declines just printed flat on the day 0. So we're it's hard to figure out again, like where the rotations are. Do they just keep buying this thing today or not? Or is it just going to be a choppy range bound day ahead of the jobs number? And all the Mag 7s right now are looking like they're bid, right? So in theory, this little level right here should hold. I'll try one at 57 and a quarter. Come on. That's just, that's how this stuff works sometimes. We're right at the 50-day here on the NQ. Remember I said 516 needs to reclaim, which it's trying to do right now. So what we need is the follow-through print up above the RTH high. Pardon me. All right, I got my 57.25. Oh, I again did that wrong. I did not want a second one there. Maybe it'll benefit me, but we shall see. I think I'll just a little worried about the number, the wholesale inventories. Wow, I couldn't even get that 3 points, so that's not good. Algo magic, they just like to front run you and take your stops and all the rest. Getting some bidding in the advanced declines, so moving a little bit higher here, but some sagging in NVIDIA. See if NQ can break through or not. Come on. That sucked. You know, they just barely missed me on that first offer. I really didn't want to have 2 contracts on. I'd rather try to see if this goes on through and then add to it if I can. Of course, now they I took it off. That was just a little too. I hate the algos. You know, I hate them. I absolutely friggin' hate them. And that's one of my things about trading. I really want to beat the algos. I friggin' hate the machines and the robots and the friggin' stupidity of AI. I mean, that's the problem with me being bullish is I kind of can't stand a lot of this shit, you know? And what, we're all supposed to turn into robots? This whole freaking society is just going to become a robot nation? God, it's so maddening. And I was talking about this. Oh, here's the wholesale number, right? Or Did it not come out yet? Let's see. Wholesale numbers were pretty much in line, a little bit lighter. Yeah, I was talking about this the other day with Danny or someone who was asking me, maybe you should, try automating your strategy, right? Like, have you ever automated your strategy? And yeah, I kind of, I have this thing about, like, it's like, what would make me happier, I guess, right? What are we in this for? What are we trading for? And I mean, I have to be truthful about my answer, which is to say that um, I like the challenge. I don't like to just. I guess it's hard to know what would make me happier. I mean, I think that the answer that I don't want to believe, or that maybe I'm too afraid to give a real try at, is what if I actually automated my system and it works, and it just prints money without me having to sit here every day and fight my emotions, and that would certainly make me happy to have just a money printing machine, I guess, right? Because then you can just sort of do what you want, travel the world or whatever you want to do. Um, but I don't want to be a robot. I don't want to live a robot's life and a robot existence. So I come in here partly because I like doing this stuff. I like the challenge of it. I like the fact that I'm fighting sort of the evil empire, or empires, if you will. And then the question is, can I actually make it work overall, long term, consistently, to where I'm taking their money, And I think you can as a trader. Let me get that out there. I do believe that you can. And I think that one of the one of the things you have to kind of study in markets and understand is the concepts and the differences between providing liquidity and taking liquidity. And I think it's very interesting because when I started trading the futures, we were in, I want to say, we were down around 1250 maybe in the in the ES, something like that. And there was a period of time when, especially in the summer, oh my God, sometimes we would have range bound trades, and they weren't even necessarily range bound trades, but the price of the instrument was so much lower, and the ATRs were so much lower that you might only get 12 or 15 points of range in a single day, right? And so back then, the concept of taking liquidity, in other words, like using market orders and things like that, the concept of that was not a trader's mindset, because there were so few ticks to be had that it was like every tick counted, and so if you were using a limit order and getting filled on a limit order instead of a market order, or like a market if touched order, or that sort of thing, you were giving up a lot of price and a lot of ticks just by taking liquidity. And so most of my early part of my career, Dad always taught me, we're liquidity providers, and if you count up all the ticks you give away at the end of your career, that amounts to a lot. So he was like, you want to be a liquidity provider, and you want to be parking your orders and using limit orders, and you don't want to have a market order cause you a lot of slippage and stuff like that. So you want to place your market orders, your stop orders, in places where it's meaningful that the signal no longer is valid, but also that you're not going to be swept with a big market order and have a whole lot of slippage because you have your stop order at an obvious place where all the other stops are going to be. And of course that concept came from the pits and being a pit trader, where all they did all day long was trade the spread. I mean, he was in the OEX, which was the options pit for the S&P 100. So at the time, that was the biggest options pit in the world, and was for a long, long time, I think. But he hardly ever exercised anything. He hardly ever carried his positions. I mean, he was still just a pit trader, trading the bid and the spread between the bid and the ask, and scalping essentially, and providing liquidity to the big institutions. And so sometimes when a big order would come in, and they were always taking the other side of that, sometimes you'd get sort of run over a little bit. But those guys they kind of knew each other. You stand in the pit in the same sort of spot every day. You get to know all the guys around you, and you're not necessarily out there trying to take the guy right next to you's money. It's just like, in here, I'm not like sitting here trying to talk something one way and then trade it the other way because I'm trying to like lure people in or something. That's, no, right? Who I'm trading against are the machines, who are the big institutions and the big, and it's like, what's changed now is that there's so much movement and so much range, and these instruments are so much higher in price, that obviously a 1% move in the ES is 77 handles instead of, back then 12 or 15 handles, right? And so we would trade with a lot bigger size because we were looking for smaller moves, right? But the way that I think personally, the way that has changed how the game can be played is, you've heard me say it. It's like, when I really screw up, it's because I'm adding to a losing trade, and that's a really dangerous thing to do in today's world when these moves are so big, right? Because the concept of providing liquidity is not the same. And so in my opinion, the style becomes, and I'm trying to perfect this more and more, but the style becomes to try to add to your winners at the right time, which means adding to the winners when the market sweeps take place. And it doesn't always mean, in my opinion, it doesn't always mean having stop entry orders at obvious places. I mean, you can do it that way, and I think a lot of traders do, but if you can anticipate where the sweep is going to come, and you can already be positioned ahead of that, and then if the sweep is big enough that they're basically repricing, like right here, I mean, if we go through these levels are they going to reprice this all the way back up to the big figure 7,800? The answer is maybe, right? We don't know until after the fact. But if they do that, on one hand, it's like in the old days, we used to be, then selling out of that and layering out of your position. But in today's world, what I'm kind of trying to perfect more and more is to actually be adding to my position, with that big liquidity sweep, and hoping that it moves far enough and fast enough that it sort of doesn't look back. So instead of quickly taking my 3 points and my 6 points, which is what my trading plan has always sort of been, um, I'm kind of like, well, why am I taking 3 points and 6 points? I did that on Tuesday, right? I got a couple contracts on. I took 5 points out of it on one, and then the thing goes 30, 35, and then I get out of the other, and then it goes another 50. I mean, so it's like, what the hell am I doing there? So what I'm trying to figure out is, how do you alter your kind of mindset about taking liquidity versus providing liquidity, um, and I think that's what I've learned from some of the guys in the room and I am pro room is, yeah, it's like a valid way of trying to trade when you have this much movement. Because if you do it the other way around and you fade into a position, I mean, I still believe you can do that just fine if you have a plan in terms of how you're going to do it. And then you also have to have a lot of capital, because you can't, you're going to get run over that so hard that if you don't actually have enough capital to be able to fade into that at good spacing, you can't like start adding to a losing position when it's 4 or 5 points against you, because it could quickly go another 30 points, 20 points, or one news announcement or tweet from Trump and it's 60 points against you. So I guess my point is, I'm trying to start with a 1 lot or a 2 lot at a level that's in anticipation of where is that sweep going to occur. And then if it occurs, hopefully there's enough movement there that it's like, oh, now it becomes just a really easy trade, no heat taken at all. And you started with, a $200 or $300 risk, or maybe a little more. Maybe if it's a couple contracts, you're using a $500 risk. But as soon as you're adding to it, you have 2 or 3 times the size, and you're still only risking that initial amount. Like, you just move your stop up with you, and if it goes quickly and hard, and you can exit, or just trail your stop, and you're locking in, a profit with the potential to have a really, good day in the market. So that's a little bit how I've started tweaking my stuff. But it's tricky because the way the algos work, and the spread, it happens so fast and so wide that you can have a good entry and it gets stopped out if you're too tight on that stuff. And if you had waited a minute or two, you might have found out that, hey, that was the perfect entry. Like this one ended up being a pretty darn good entry, right? But you didn't have to be in a hurry. You see how it gave you multiple times to test that 57 level before it finally went through and gave you 10 points. But what got me a little scared there was I had my offer, you know, on one of them just for a few points. And every time it came up to me, it came like, really close within 1 or 2 ticks. And then I didn't get filled. And then it comes back down here. And I'm thinking, oh boy, now they can see my stops down there. They're probably just going to sweep it, take me out the other way. And then those are the kinds of things that can get me personally really rattled and emotional. Um, Yeah, Stuart, I don't personally trade the micros. I don't like them. I think they're just another way for the broker dealers to get paid more commission. So you could do that. But what I'd rather do is build my account and perfect it to where if I want to trade a 10 lot, trade 10 minis instead of micros. I mean, I want to do this to be able to try to make some money that's meaningful for me. And everybody's different, so don't get me wrong in terms of my tone of voice there. I think the micros are great in terms of having a less risk and something to trade smaller if you're not trading well and all that kind of thing. But you have to look at the structure of what you pay overall for your round turn. And what I like about the minis is that all I need is 1 tick and it's a net profitable trade, right? Whereas in the micros, you need, basically 2 to break even and 3 to have a net profitable trade. And so to me, that's like a way of churning, I mean, how much, what's the difference between, you're risking the same if you put 10 micros on versus 1 mini, but you're spending a lot more in terms of commission on those. So I don't know. There's just a little bit of a bias of mine on that. Here we go. Let's see if this thing wants to explode now. It could, because we have some pretty good stuff happening here on the NQ like I was looking for. So there's a little bit of a stack of orders here. I'm going to just try one here. 66 and a quarter. Try to talk my own game here. I want to try to get a fill where they just barely come in and fill me and then they explode it. So I'm going to risk 4 points if I can get it. All right, then I'm going to put a stop in here and a stop in here, and I'm going to see if they can take this out to new highs. And then I can trail these stops if I still only want to risk a couple, right? Could easily reject. We're not really seeing confirmation in NVIDIA, but it looks like NQ still does want to confirm, but we do have some buying in SpaceX this morning, a little bit, not a huge amount. May not work here. It looks like a falsie. Advanced declines are going out to new high. Well, not new highs, but they are pushing a little higher. Yeah. But look, I mean, if it can't pull back that much, then they could still come in here and buy these. I better get out though, right? Now it's sort of going against me. All right, NQ's trying to make a new high here, so let's see if they can really run these. Try to get one off at 73 and a quarter, and 76 and a quarter. Doesn't seem to want to go, so we don't want to see it now break the low of this red bar, which it easily could do on a falsie. 65, so 64 and 3/4. I really want to see what NQ does. If NQ explodes with the big candle here, but it's kind of giving me a little divergence, right? So I'm probably being stubborn right here. But look at how NQ is sort of ripping and taking these buy stops. So if ES decides to go along, right, then there's a lot of buy stops up above there that in theory should be providing a sweep to the upside. I mean, look at this stack of offers right there where I'm looking to buy another one. Kind of don't like the way it's acting. Nvidia looks like crap now, so I could be in a bad way here in a second. Now if it goes back above this 65 and a quarter, that could be the spot where they start to buy them again, but shit. Now they're sweeping me. Fuck. So I better get out. I might try one more right at this level. The big tell there was Nvidia was not confirming, right? So now it's broken this support level. I better get out, right? That sucked. But now what you've got is a potential for this thing to sweep and go a lot lower if Nvidia especially takes it down. That was a rough one. That's what happens when you're for sure about something, right? You get for sure about something and then they take it the other way. Yeah, I was up on that trade. Made a little money in the overnight. Now, sometimes what they'll do is if they still have stock to buy, they will hold the open. So sometimes you can get a perfect test of the open here and it holds. So I'll try that if I can get it. But technically now I'm on a short sell signal because now you've potentially trapped all the longs like me and they can continue to sweep it a lot lower if they want. We do have crude trying to rally back above its open. It's above its open, and whether or not it rallies, we'll see. All right, let's see if I can get this right this time. Doesn't look like it. Looks like they might want to sweep all the way down through, but look, if the NQ holds right here and starts going higher again, then this sometimes can be a great entry right at the open. All right, let's see if it can follow through now. Looks like the follow through is going to be to the downside. NVIDIA seems like it's eyeing lows. I'm going to try and stay with it for just another minute or so. There goes NVIDIA. Fuck. Guess I'm getting this wrong today, guys. We'll see. Yeah. Doesn't feel right. I just really need NVIDIA to hold here, but it doesn't seem like it wants to. So the question is, did they just suck in a bunch more shorts? You've got stops now above the 58 and 3/4, and then the big stops way above, right? So it's a matter of, do they hold this and keep this sort of bullish move alive? Did they suck in enough people trying to be short here? I better put my stop in, right? If we go back below the open, I might want to flip it short, honestly, but I think NQ wants new highs. We need NVIDIA to start coming along again with it. Let's go, baby. It's that 57 level again. So if it can hold there, we're getting a little bit of an uptick. Lots of stops above that NQ high. So it could get pretty gnarly again to the upside if NQ starts to really go again here. Man, I'd like to see NVIDIA join along, but I may not get that. There are just these confusing cross currents, right? So it could be that we've put in our range and that we're not going to break out of this range, but the NQ did. So if we get any follow through in the NQ here, you know, there we go. Come on. Man, they are working me today, huh? Nice. Okay. Thanks for that, Stuart. Maybe I ought to be getting out. I am on a short signal here, technically speaking. So why don't I give it a try? You know what I mean? There goes NVIDIA. Damn it. That was frustrating. They may be sucking me in here just to face rip them, but with NVIDIA eyeing lows, maybe they'll sweep it back down. Tough trade, guys. But this is now a huge head and shoulders formation with the right shoulder below the left shoulder. So this could accelerate. I don't want to get stopped out. I mean, I'm more bullish than I am bearish, but they do have the potential to take this thing back down to the breakout point, you know? Hmm. Fuck. Come on. Pardon the language. Hmm. Now they've trapped me. Now they've trapped me. Fuck. Not in the flow at all today, guys. Of course, that's partly because there's no flow. It's getting better. This could be a great rejection point. Incredible. Just a little early on these. Crude's rallying some, so maybe this could be the right short. see what levels we have here. The S1 level is 29.5. What I was looking for on the pullback, if this is wave 2, is possibly, the breakout point was 76.48 3/4. Possibly we can get like a third or so pullback from this move. Yeah, thanks for pointing it out, Stuart. In terms of the YM, look at how the YM is dropping pretty hard now. And the bonds are selling off a little bit too, so maybe that's part of the difficulty here again. Maybe it's stupid trying to sell more of these. Getting 500 down ticks, so maybe it'll follow through. No, it's just going to go higher. Fuck. Look at NQ. God dang it. I'm sort of doing everything wrong, aren't I? All right, I'll probably end up breaching this account, it looks like, but Oh, well, fuck. That's not how you do it, guys. Not how you do it. It sucks to have a good day. I mean, it wasn't a great day, but a good day go into the red and turn into a red day. That's pretty much what I just did. These were good signals, every one of them. Well, there's some choppiness for sure, but that signal, that signal. Just look at the NQ. I mean, that's the thing, is it couldn't even pull back to the open right there, right? So this has the potential to keep ripping and squeezing hard now that they've trapped enough people, right? It's a tricky trade because you've got, like Stuart's pointing out, you've got the YM down and looking pretty negative. You have the RTY rejecting and ES rejecting and back into the range. And you have some weakness in the bonds this morning. So but what did I say earlier? I was like, we may just have a day where we continue to consolidate ahead of the jobs number tomorrow. So you don't really know what kind of day you're going to get until after the fact, right? They could still run these things in both directions pretty hard. And you could have great moves on both sides with good entries, but you might not really do a whole lot in terms of, you just still might just be consolidating. And I should know better because I said it out loud, right? But and what happens with me, again, I said it straight away. I started trading early, started trading too early. For me, when I do that, I just tend to not do as well. It's like, wait and get a sense of what is happening. And here you go. Like, you get this retest of the open, and then it still can't even penetrate down through, right? So now we've reclaimed the open, started to move higher. Anyone who's short here has to be worried, right? If NQ rips right up through its highs, it could easily reclaim the 30,000 level, and all of a sudden NQ's trying to take out the all-time highs and just do that sort of catch-up trade. So I'm pretty disappointed in myself. That was not how you do it. That's okay. We'll get them back tomorrow. I'm not gonna probably trade more today. When you're doing this kind of stuff, you have to respect, like, if you breach an account, don't go jumping into the next account. Don't, it's like, just move on to the next day. What I think a lot of traders like to do too is kind of look for one entry a day. Right, one or two entries a day, and leave it at that. And if you take a couple stops, you're not feeling it. You're not in the flow. You're not picking a good spot, you know? I don't know. That's a little bit of a that's not, again, kind of how I would like to trade. I'd like to be able to trade, most of the day and take a lot of setups and stuff and get a, because it's sort of helpful, I think, to be able to get a feel or try to get a feel for, is there obvious price action? Because when there is obvious price action, that's when you really want to try to take advantage. And like Tuesday, I mean, I did okay, but it's like Tuesday was the day to really be pressing it, right? Just be loaded up. And again, after the fact is always easy. It's always easy to look at these chart patterns and everything else and say, oh, yeah, you should have bought them here and you sold them here. And this is. I know it's total, lots of monkey wrench, right? What was the big one that was down crazy though? Let's take a look at that one. Western Digital. Okay, so they've started buying it a little bit. It was down 15%. Now it's down only 10%. SanDisk, hasn't bounced much, right? But a lot of these other ones are looking better. Let's see here. Like 20. And I could be wrong too. Like, some people are calling this big move sort of the top, right? Like a big blow off top kind of thing. And that could be the case. Like if the NQ actually rejects the 50-day moving average again and they just start dumping, like, here's Nvidia going down, taking out its overnight low now, right? So if that was the opportunity for everyone to get out of these tech names for a while, and we do reject, and that becomes a big sort of top in the market, then that's an interesting scenario as well, right? Because I don't know, the move we had in April and May was so spectacular, that I mean, I couldn't really believe it, honestly. And then to have just this sort of like couple month sideways moderate pullback that we had, I mean, pretty classic back and fill action. But then to get this, huge ripper, it could be just one of those things you see. I mean, we've got some other like substantial um, things to watch in terms of the, like the gold market broke its downtrend, trading 43.30. And then these bond markets, they came back in from their breakout point fairly substantially, but they haven't totally broken. They sort of broke their uptrend in yields, but not so much. Like it's sort of just a test of those uptrends in yields. So if you start to see the bond markets just consistently starting to sell off again here, we might not be out of the woods yet with this stuff, and you could see this reversal back. It could be a big setup where they reverse it all the way back through that consolidation we made over the past couple months. But I don't know. I mean, I still kind of feel like the market has acted, and what I continue to sort of feel in my brain is like that you have to own assets to mitigate your risk of the inflation side, right? I mean, that's how you combat it, is to own assets. So, and especially with the rest of the world, like where else is the money going to go? It just seems like the US stock market. Yeah, Globex can be pretty good live action. Like, I mean, it's sort of the same as anything though. It's like oftentimes Globex is just choppy, and there's so much less volume that you can get gamed just as hard. And then other times you have a Globex session where there's someone really getting out of a position, and so they start taking it one way or the other, and they don't hardly look back, and or they get into a mode where they're like every little rally they're selling, or vice versa, and if you're not respecting whatever system you have, it's really all about respecting your system, respecting your wins and losses, and trying to keep your losses to a smaller amount, over the long run. That's really all trading is, if you're not, I know everyone uses the R, R2, I got an R2 or whatever. It's the thing I always used was the profit factor. So you take your percentage of wins times your average dollar amount of your win, and you divide that by your percentage of losses times the average dollar amount of your losses. And that gives you your profit factor. And if your profit factor is above 1, that means you have a winning strategy. It just means that all those ratios work out in a positive manner, right? And so you can look at your profit factors. You can have different setups. Like I have my 1-minute trend entry setup. I have a 1-minute reversal entry setup. And then the other one that's quite good is the 15-minute doji reversal setup. And the reason I can say that with confidence is because I've tracked and journaled all those trades for years. And so I can tell you on my, like this year, for instance, on my 1 minute trend trade setups, I have a profit factor of 1.97. On my 1 minute reversal trade setups, I have a profit factor of 2.60. And on my 15-minute and those are, I mean, those are the ones that mean the most, because those are the ones that I take the most trades on. So I have a lot of trades that I can, you know, say, oh, well, I'm not just getting like a skewed data set, because on my 15-minute entry trades, I don't have nearly as many trades. So I've got a reversal doji setup that's a 1.19, but I've only taken 12 trades on that. I have a reversal 15-minute entry that I've only taken 20 trades on. And it actually has a 3.29 profit factor. So it's like that's great, but that doesn't, it's only over 20 trades. Whereas on my 1 minute trend entries, I have a total number of trades there of 258. And on my 1 minute reversal trades, I have a total number of 259. Interesting enough. And I mean, we always sort of talked about how the reversal entries should generally be your best profit factor trades, because the risk reward is so good. You should be taking trades that on a reversal, you know, where there's a really, if it reverses and goes hard, it can go a ways, right? That's the concept of that type of reversal entry. And then the trend entries, similarly, like I don't track it this way, but you could probably track it this way easily. And you could see how the profit factor likely diminishes, right? Say the reversal trade occurs, okay? But then measuring the first trend pullback versus the second trend pullback versus the third trend pullback. And obviously, the longer it goes, sort of the less juice you have left in the trade, and therefore the more likely it is that you're not, that you're not going to get the follow through, because it's gone so far so fast. I mean, all those different things come into play, but if you're measuring it statistically in a really real way there, then the statistics are going to tell you the things that you already can kind of see for yourself. Like if you've watched markets for a long time and you've watched the setups and the charts for a long time, oftentimes your statistics sort of verify what in your brain you can kind of feel and see and understand, right? So yeah, I know I use ticks a lot too. Um, I use them better when I'm trying to exit. I think they're a really good thing to watch, or at least just have up that you can quickly glance at. Because that's kind of what just happened, right? I started flipping from my long premise. First of all, that to me is one of the things that's a big sort of lurking demon and red flag is like flipping from one side of the market to the other. It usually is going to cost you money, okay? It's just way easier to pick a side and stick with that side. Um, and if you don't have a bias coming into the day, then you want to be careful of not. I mean, I guess you can use your rule set for what your bias is. Like normally what I do is I just say, look, if price is above the open, I want to be more biased to the long side. And if price is below, I want to be more biased to the short side. But that doesn't mean you don't look for some reversal trades in those scenarios. 'Cause like say, you get a huge run, and when it gets totally overextended or when it hits your ATRs or that sort of thing, let's look at YM for a minute on that, right? Here's the YM chart. Here's the yellow box is my ATR box. It represents a 5-day ATR range in the YM, which is currently up to, it's like 800 points or so, right? So right now, it tried the upside, it failed, couldn't take out the overnight high, and now it's gone straight down. So you can go like this. And use that overnight high, say, as your high point. And if this is not a range bound day, right? If this ends up being sort of a trending day, positioning day ahead of the jobs number, which they can be, right? The YM, I mean, you could get a nice reaction here somewhere, but they're now starting to feel it, right? So the downside target on YM just for today could be 53,890. And that doesn't mean we'll get it because we've been in this expanding situation with ATR volatility. But we could get it. Like the algos and the bots pay attention to this stuff. And you're seeing the bond market sell off again a little bit here. So, they're making new lows. Oil's breaking out and making a new high. But, looking at this ES chart, I mean, it's just been chop. It was chop overnight. It was chop this morning. Now they're through the open. They're taking out, or they're trying to take out this 45 level, and bonds are coming off here. So it could be that Stewart's, noticing the YM. Sometimes the YM will actually lead the ES. You can't. There's times when you'll see that, so you can sometimes pick up on that kind of price action and that kind of leadership and say, oh boy, YM, here we go again, new lows. And then if the rest of the markets start to follow some of these things and they start to look coordinated, that's a really nice thing to pick up on for the day, because now you might be able to find sort of the engine of the day that helps you find your entries and your exits and stuff. And for exits, you can take notice of any divergences that you see. See what the crude chart looks like, because it could be also the one leading us. So crude couldn't take out the lows, and now it's taken out this level here and is moving higher. So and it put in a doji day yesterday. So sometimes these doji days, they're just coiled springs, right? But not always. You don't always know the direction of them. But if they break out one way or another, so look, we had a narrow range NR 7-day yesterday in crude after another big move to the downside. And it's like, here we go. If it wants to fulfill its ATR, it could be right back up to $80. And we're all standing around scratching our heads again, wondering, and looking at these bond charts, now they're starting to look a little more aggressive to the sell side. So my disappointment is that I didn't wait longer. Maybe I would have tried the short side. My bigger disappointment is flipping around, because it's just confusing. Think of it this way: if you're confused about what you want to do in the market, so is a lot of other people, and that's what can create the choppiness and the lack of follow through, right? So I could have just stayed with my long thesis, taken my one entry here, and then look, once this thing failed and starts rolling over like this, for me, all I have to do is respect the slope of that 1 minute moving average. And even the 15-minute, it never even really turned, so this is sloping from the day before, and then all it did, it just flattened out here. And when they make an effort like this to come up and they can't retake that high, and then it fails again, that's, look, it comes back through that 15-minute downsloping moving average, and then that ended up being a great short side entry, right? Because you had a nice stop level above there, it was a 6 or 7 point stop, so you do have to take some risk on it. But you know where the low of the day is, so if you were getting short in there, at 57s, it's like you're taking a 6 or 7 point risk to try and make at least your 20 points. And then the theory is, well, if it's taking out the lows and it becomes a day like the YM is having, then it could go a lot lower, right? So if we pull up the 15-minute chart now and start looking at this is the theory behind a big sort of blow off top is, these kinds of thrusts and moves and then reversals. Now it starts to look like a giant head and shoulders, right? Because here's your head, left shoulder, right shoulder, which is lower than the left shoulder. And if you assume that now that the high of the day is in, pull this ATR chart down, there's some error that could occur here, because if this is this kind of price action, think of it another way. This kind of price action we saw on Tuesday was somewhat the mirror image, the reverse mirror image of what we saw on the close on Fed Day. And what you find out later, and always after the fact, or not always, but often you hear later about some big fund or some big position that had to get unwound for whatever reason. They went out of business or whatever it was. So they had to unwind their position. Well, this is the same kind of thing that can happen on this side, right? I mean, that was sustained bid action that was it was pretty spectacular, right? So now again, you have that indication that this level's broken. And is all this stuff support really in here? Not really. It's like the price discovery needs to happen. I mean, I guess there's this little level, this little box right here from 41 to 33. I guess you can consider that a little zone, right? But yeah, if we've put in our high of the day and we fulfill our ATR, it just takes us right back down to the breakout point. And then you really should see support there, because how many people think, oh, we broke out, man, I'm not chasing it here, right? So they're kind of like, as they start to approach that breakout point is where they should start nibbling, right? So that's why I had a target, a 2-day target, meaning today, even though I was still thinking long. I was thinking, on my sheet here, look, I have a question mark. In 2 days, a projected low of a third of that distance amount gets you back to 76.55. But if you start getting close to that amount, then you would expect there to be some buying, right? If this ends up being just sort of a range-bound day because nobody wants to commit to a lot ahead of the jobs number, then you can also just have this be an expanding range where they've now run the downside targets. We had a S1 level at 29.5, and we haven't gotten there, but that could be enough of a little flush where then they start covering them again, and they could take it right back into the range, and they could reverse it right back up into the 80s or 85s, or if price is really bullish enough, that's what should happen, right? If this was really a blow off kind of top, then oftentimes tops and bottoms, they don't give you another chance. You had some chance here, you had some chance here, and you start looking after the fact and you're like, man, why the hell didn't I take some chips off the table when it gave us this, and so that's the kind of stuff that sometimes can drive these moves and these reversals. Yeah, I'm just reading your comments. I mean, one thing I like to do with my trading is just sometimes I just try to get in at a spot, and what I want to see is I just want to see it go my way immediately. And so if it starts to tick against me, I'm like, yeah, this doesn't, because it can just move so fast, so quickly, that it's like, I have a hard time with adjusting to like wider stops and stuff because I'm like, man, a 2 point stop would have worked just as well right there as a 10-point stop, because it's like it's trying to just like identify a level in my own brain where if the level's broken, just get out. you know if this level of 43 is broken, it could just be a false breakdown and they start just sweeping stops the other way. So I mean, you can have a tight stop sometimes that's meaningful, and sometimes it just works and it holds. Like the 57s up here, you didn't have to take that much heat. If you were buying them in the 57s, it only went 1.5 against you, right? So if you're using like a 5-point stop, the point I'm trying to make is as soon as that trade then starts moving in my direction, I don't necessarily want to leave my stop down here. I at least want to adjust it up to the level that makes sense, because if it starts moving my direction and then reverses, that's when they really can take it hard. So similar thing right here. If you're short at a retest of these highs at 42.5, I mean, you can have a stop right here, say at 46.5 as a 4-point stop. But it came down a little bit and followed through some, and then it didn't break, and so now it's actually trying to move back up to the upside. So it's like, well, if this is an expanding range kind of scenario, they're not going to give the shorts another chance. That often the expanding range type of trade, it will just reverse down here and then they'll just take it straight back up. So I mean, that's personally what I constantly battle with, is how much room do you give, and how much time do you give? Like, that's why I liked your comment there, because you could just be saying, well, the 42s weren't a good enough pullback, because really they should be testing. This was a support level, and when it broke, it should become the resistance. So if you can get it more at the 45s, but it's similar to what I was just talking about in the bigger time frame. Like, if that's a resistance level, sometimes you just won't get the perfect test of it because they come in and start selling it in front of that resistance, right? Or vice versa. So now, like, if you were short, say the 42s, and you gave it 5 points, 4 or 5 points as your stop level, okay, now price has started to follow through for you, right? So now, in my opinion, it's okay to move your stop down like that and put it just above the high of this candle. Or, what I like to say is even better yet, is if this candle now breaks and makes a new low, you don't really want it coming back up into this range, right? So if it breaks here, my theory is you can take a stop at 41, or you can take a stop at 45 or 46. The point is, if the buyers start coming back in, they really, a 41 stop could just as easily get taken out at a 51 or 53 stop, which, so it's managing that stuff is, I think I enjoy managing that stuff and trying to read that stuff. But then ultimately, the reality is that anyone can come in and sweep the market at any time. They just come in and buy market order of 3,000 contracts or something, and they will sweep it right back up to the 45s, you know? Yeah, one trade can make your month even, right? Like um, that's the reminder of what dad and I used to talk about is like if you're a trend trader, a 50-50 win rate is fine, right? Because in theory, you have 3 or 4 really good trades that basically go your way and never look back, and you don't have to take a lot of heat on them, and you can let the winner run and have a big profitable day. And if you have a few of those a month, you know, one a week basically, and the rest of the time you're keeping your losses to enough a small enough amount that that profit factor remains above 1 or 1.5 or however you want to measure it in terms of um, is it a good strategy, um, and that's all you need to do as a trader. That's why like the demons that I fight when I flip around and I get over trading and all this kind of shit, you're just I just gave money away. That's what I just did, you know. I was just handing that over to the algos when I'm trying to actually beat the algos, you know. And that's where I think that the concept is, you know, trying to align yourself with the momentum so that then you can use the math, what I call the algo math, to actually hold your runner longer than you might otherwise, right? Like in YM, for instance. I mean, okay, for those of you that are short YM right here, you know, you might think, wow, I just made, you know, 500 points. Maybe I should get out. I mean, this is probably a decent spot where you should get some support, right? Because you have this previous high right here. There should be some buying that comes in. But sometimes when they run stops down into a range, they'll actually get to the middle of this range or even try to test the bottom of that range. It just depends on the positioning and how many stops are where, and you know, um, but what I'm saying is if you're short from up in here on the breakdown, um, awesome, like nice friggin' trade, right? Good job, and way to stay with it. And now you can just literally be using a 15-minute time frame. You can have your stop above the highs of each of these candles, but the longer in the tooth it gets, you could also be saying like, you know, where does this candle close? You can also look at the low of the previous candle. So the low here was 54,161. You know, if price starts moving back above that low, then actually in 6.5 minutes, you could end up with a big reversal candle that where they target the buy stops, right? For anyone that's short. Um, and that, you know, that could be kind of your cue to get out. But if then in the next 6.5 minutes they keep expanding this thing down like this, then here's, you know, ultimately you can have a target where they really accelerate it and dump it through that big 54,000 level. And if you're using algo math, you know, I like to have an order in. I always, you know, if I have a position on where I have, say, units of 3, so that you have at least a runner that you're trying to hold, I like to put in an order at some extreme level like this in case, you know, because you don't know when the pain level is going to hit so much that somebody comes in with a sell market order and just dumps the rest of their position right there. And that's when you want to be providing the liquidity to them, but at a level that is capitulation, you know, um, and extreme, you know, an extreme level. And you may not get it, right? Like you've had all of these red bars with one little green bar, you know, you should expect some buying to come in at some point. But then when you look at what happened with ES the other day, I mean, that's why it was a bit of a hard trade, right? Because you had all these green bars, one little red bar there, one little red bar there, but otherwise just green bar, green bar, green bar, green bar. So if you had done a better job than I did, I mean, I had a really hard time buying this thing around 76.99 or 97 or whatever. But then, you know, the theory of it is you could have just kept trailing your stop below these lows right here. Basically, you would have got stopped out. But not if you can use a hybrid system, right? So that if you had wanted to, instead of using the low of this little candle, you could have instead used the high of this candle as your stop out point, and see how that never got violated. So sometimes you can adjust your stop based on how long in the tooth the trade is, right? Because you know, you could be saying, well, I didn't want my stop way down here because if it violated that little high, then they might easily violate those lows and those lows and those lows. You know, you get a candle like this. But anyway, I don't know. I'm kind of rambling at this point, right? But let's see what happens. You have 3 more minutes till the close of this candle here in the ES. And, you know, it's like, where are they going to close this thing? Look at the bond markets right now. They're, you know, they're looking pretty much like sell side pressure again. And you have advanced declines that are negative on the day. NVIDIA dropping back, still on its lows, kind of, right? What are you saying here? This is an interesting thing. Right. Yeah, I like that. And that's a big part of when I'm trading well. That's a big part of how I trade and how I like the challenge of the markets is, and that's why I say I normally do a lot better when I wait. When I wait and try to take a trade after the first hour as my first trade. It's even an indication for me personally of like, if I can't sit here and watch for an hour, I'm too anxious, you know? I'm not letting the trades come to me. I'm too anxious to go in there and try to make money. It's like, no, no, it doesn't. Yeah, it doesn't work as much for me. But now, to be fair, like I don't have a good opening range strategy, or something like that I've consistently tried to do and follow. So what happens? Well, because I don't have that, if I start to trade too early, I'm not really following a plan, right? This is business. This is a business, and we have to run it like a business. And I think a lot of times one of the hard parts is, just trying to find a setup that you believe in and that you have confidence in. And so a lot of people talk about that. They talk about back testing, because back testing and having the actual statistics and the numbers, is what should give you the confidence and the belief in the actual system, that from a long-term probabilistic outcome, the system works. And then, you got to follow it. I have to follow it. Why didn't I follow it today, right? What's the problem here, Bozier? It's not that big a deal, right? You don't have to come in here and rush and be anxious. The whole concept is to know what you want to do, what your setups are, and wait patiently until they come, and then just take them, put in your stop, and the trade either works or it doesn't. And yeah, I think that the idea of multiple filters and multiple, trying to find sort of confluence of price action, like I talk about a lot, like the very best days are the days when everything's risk on or everything's risk off. I mean, those can be the very worst days too, because if you fade it and you don't take your stops and you add to your losers, you're going to blow your account. And I mean that on a personal level, you'll blow your personal account. It won't just be a little $2,000 loss or whatever in a prop firm account. It'll be a $20,000 loss in a personal account, right? So that's why there's a lot to be said for prop firm accounts, because they're just trying to teach you to minimize your risk and to trade less. And that's the whole thing, is like, don't be in a rush. Yep. Agree. Live action. And I use the advanced declines that way. I use my big board and the Mag 7. I watch all this stuff all simultaneously, because I want to have a sense like, oh, wow, here we go. Everything just ticked green right there, right? And look at what happened. It was, partly the close of these bars. So what did I say? The close of the bar on the YM, it closed red, it expanded that. So now where do you have your stop? I mean, technically you don't want this to put in a 2-bar reversal, right? So you don't want price to get back up and violate the 190s. But because this was a pretty good move, you may have instead decided, that the longer, the more it moves in your favor, maybe you end up using a tighter stop as you get down there more, right? So up here, maybe you used the previous two highs as your stop level, and then you keep trailing it and trailing it. But as soon as it starts getting, and it's a pretty long candle there, then you get a bit of a wick, and then you get, a candle that's, when these things happen and they open on their high and close on their low, it's starting to get a little overdone sometimes. I mean, especially after a move like that, right? You can't just expect it to go forever and ever. You can hope that it goes and then just try to have a stop that, it's like, where now is your risk reward? You kind of have to adjust that risk reward as you go, because it's like, how much is left in this trade? Like, and that's where sometimes it can keep going and you can get unlucky and get shaken out, or you can get lucky and you don't get shaken out and it keeps going. And so, how you manage that, I don't know, because I'm constantly trying to figure it out. But you see what I'm talking about here with stops is, if this becomes if this ends up just being a range bound and an expanding range bound day, then, what happens is all the stops are now lined up again back up here, all the buy stops. So from a positioning perspective, if the algos come in and get a read on that and they see that everyone's gotten short again, now they just come in and start squeezing the stops again to the upside. That might not happen today with the bond market. I don't know, all the stuff that's going on in the world right now and all the different cross currents, it's really hard to know. And so I think, the point of technical analysis and the point of order flow and stuff like that is just, we don't need to know, right? You can theorize about it and you can try to find like an engine of the day, but you also can just take your setups and know that positioning sort of drives the outcome. Because if the buyers are anxious here, then they'll start bidding it up, right? And if the sellers are anxious, they'll just keep hitting the bid and go out to new lows. But when you have a big number like we have tomorrow, you can get these trades that follow through a little bit. They start making you think that we're going to have a trending day, and then they reverse because there's just not really a reason for anyone to do a huge amount ahead of the number, right? I mean, and that's theoretical. Like, it could be that there's some big hedge fund out there that, got massively short yesterday on the open, and maybe they've seen enough of a pullback here to start buying them again. And so, or vice versa. Maybe there are people that were loading up long, thinking we'd see even more follow through, but then they have to go against that order flow. And now it's like, oh shoot, bonds are taking a dump again here. Now crude's starting to rally. We better get out of some of this shit. So they start hitting the bid. Sell market, sell market, sell market. Okay, so I've gone on long enough, rattling my brain, rattling my P&L today. Again, kind of annoyed, but that's trading. So I'll kind of leave everyone with that. Of course, if you have any questions. No, you don't. I do for sure. And maybe there's some news because oil's getting going pretty good here. Yeah, I'll kind of leave that to you guys. If anyone needs to talk more, I'm glad to answer any questions or help if I can. You can see I'm not always the best trader. Certainly have my stupidity. And we just have to try to fight that off and you know, do the best we can every day, and that's it. So good luck today, good luck tomorrow, and we'll catch up with you guys the next time. I'll go ahead and put my links in and stuff. If you want to check out my room or my website or whatever, you can. See what happens. All right. Cheers, everybody.